Hello everyone, welcome back to another weekly watch list video where we go over everything you need to know for the week ahead. And we have a lot to get to. So let's just jump right into it. Here are the earnings for the week. Not really interested too much in earnings this week. There's a lot of other things to be interested in. And to be honest, earnings season is over. So we're starting to get these last companies to trickle in. Not really interested. What I am interested in is our weekly performance based on sector. So on the 1 week relative performance, last week we saw energy as a big loser. Now, if you watched my video from last week, you will know, and not just last week, but the last couple of weeks, I have been very negative on energy, showing many charts of where we can see some pullbacks. And that's exactly what has happened. It now finally cracked for those of you that have been so patient, waiting for that consolidation to break, and it broke to the downside. So that is great to see. Our call out on energy has been great from the start of the year, and then I called the top here, what it looks like anyway, has happened. So that is the 1 week relative performance. On the day, I mean, you know, Friday was just a very it's been a very choppy week in general. But, you know, just looking at this on the 1 month, you know, I like to see what is climbing, what has been sinking. And, you know, that's what gives me a very good gauge of what's really in demand at the time or not in demand at the moment. So we can see here on the year, energy still up 33%. This was up well over 40%. The last couple weeks has chomped a lot of that off. So we just need to keep, you know, an eye on these sectors, see what comes into play. Taking a look over here at the bonds, the 10-year, all right? You can see here on Friday, the 10-year spiked. The 10-year went up a lot, and the market went the other way, all right? This is what we've been seeing in the past. When Treasury yields rise rapidly, the market falls. When the Treasury yields rise, that is in suggestion from the market that the Fed is going to have to keep those rates higher. And that's why the yields go up as the bonds get sold off. And that's what we see with this divergence of the market. So the market doesn't like that. All right, so it's getting prepared ahead for the week, which is a huge economic calendar week. And that's what we're going to take a look at right now. All right, we have on Tuesday the CPI, the Consumer Price Index. If you're new, this is going to definitely 100% move markets like we saw on Friday. On Friday, guys, the Producer Price Index, it was a slight miss, and the market crashed down before trying to dig itself out, only in the last half an hour to give it all back. All right, so this is going to be big. This is an inflation data number that's going to come out, and we'll have to just wait and see. We're just going to have to wait and see. And on Wednesday, there you go, at 2 o'clock, we're going to see what the federal funds rate announcement is going to be. All right, we're also going to get the median federal funds rate for the end of 2023. We're going to have a very good gauge at 2:30 with Powell speaking of where they plan things going the next year. It's going to be wild. So if you're trading these days, good luck. All right, it's really, really going to be very difficult. And you need to be aware of that, you know, that it could be very tough to trade during a lot of computer algorithm trading that's going to take place. You're going to see a lot of volume Tuesday. You're going to see a lot of volume Wednesday. So be aware. Now, going over onto the SPY. This is our compass. This is going to give us a probability, right? Because nobody can call the markets. Nobody can tell you where it's going to go. If they do, they are completely lying to you. What we do is we give a good prediction of what we see with the technicals. All right? The technicals and a couple key indicators, that has been the way that I've been calling the market all year. And it's been a very technical year. It's been a year that you can call using technical analysis. All right, so where do we currently stand? Take a look at this chop, this consolidation. All right, for the better part of a month, we have gone nowhere. We closed on Friday, the lowest close since we've had since the 17th. All right, almost a full month, about 3 weeks. That's our lowest close, weekly close. So, you know, we gave it all back. We had this huge spike up when Powell spoke, hit the trend line, and then came on down. I was calling to take puts right here, and that is a great trade. So if anybody else did that, congratulations. It has only rejected that line all year long. It doesn't take a rocket scientist to see that, okay? Now, everybody else sees that also, so you have to be aware that if everybody is seeing the same thing, it can either be a fake out or it can be continuation to the downside. Right now, we are currently still in an uptrend. This is still an uptrend. As crazy as that sounds, it's barely hanging on to this uptrend that started back in October. All right, it's still intact. Like I said, as crazy as that sounds, it's still intact. So this is where we currently stand right now. We're under the 20 EMA. I don't feel bullish about a market when we're under the 20 and we're under the 200. Now that can easily change this week. Like I say all the time, those macro events can change easily the technicals. All right, you get, you know, Powell speaking and says something that the market's not expecting. You get CPI that's, you know, crazy. That can all change. So just got to be well aware of that. All right, so that's the SPY. That's where we're currently sitting on that. Now, taking a look at the QQQ, this is the NASDAQ. Guys, the QQQ is just the ETF that follows the NASDAQ, just like the SPY follows the S&P 500. Same situation here. All right, this is a very clear trading range. Now, when something is doing this, it's very tough to trade when you're in the middle, right? Only the good trades come from here, right? Only the good trades come from right here. This double top, all right? So this could have been a good short. This was after Powell spoke. Another reason to have gotten short the market. This is why you need to look at multiple indexes, all right? So you had a double top here and then a sell off to the bottom. Now, the good trades here were going long at support, right? If you're trading in the middle, what are you doing? Where are you going? You could take intraday scalps, that's fine. But this is just very tough to trade. It's a lot easier to trade the summer rally. It was a lot easier to trade the 2020, 2021, straight up to the top right of the charts rally. It's tough to trade consolidation. It's tough to trade choppiness. Now we've had some nice pushes. We've had some nice retracements, but now this has been just a mess. It's been a mess since October, just consolidating, trying to stay above these lows that we saw back in June. You hear about the June lows all the time. Like I said, though, this week with the economic calendar, even though we're still in this little bit of an uptrend, even though you have right up here resistance and support, that can all change this week. So be prepared for that. All right, now we're going to go over to the IWM. This is the Russell 2K. This is all the small cap stocks. The 2,000 small cap stocks make up this ETF. All right, and this is where we're sitting right here, currently at the 50 moving average. This kind of looks like it wants to continue to sell off. We had clear resistance here that we showed you guys last week, and that's what we saw, the continuation. All right, so nothing much going on there unless we get a rally. This is going to break the 50. On the Dow, finally started to roll over. All right, this was an outperformer, a beautiful one too. Got as close to here where we opened up the year, only down 5% on the year. And now we're down a little bit more. All right, down a little bit over 7%, just about 8%. On the weekly for the Dow, we get this big red candle on the weekly, the lowest close since about a month ago. All right, that looks very bearish to me. The last times we've seen this, we've seen continuation. That's a very bearish candle, and that's on the weekly. We can take a look at the other weeklies, and I'll show you guys that we gave back all the gains for the past 3 weeks on all of them. All right, that's what we're going into CPI and the FOMC with. That's the markets. All right, now I want to show you guys the VIX on the daily chart. This is interesting stuff. How many times do we call this out? Look at the support here. Look at the support here all year long. At 20. We got it again. We got it again. As this spikes now, so when it comes down, the market goes up. When this goes up, the VIX, the volatility index, the market pulls on back. All right, it's been like this all year, this up and down, right? So when we were coming into this area, we were all wondering if we would see a bounce or if we would break through and have that continuation down to more normal VIX levels. That did not happen. All right, so as this goes up, the market will continue to come on down. All right, now going over to the yields. This is a very interesting chart. This follows the yield, all right, for the 10-year. Now, as we saw the yields rise here on Friday, it bounced off of this trend line. All right, when it gets hot like this was back in October, it hit its high, the yields hit its high, the markets hit its low, and then it pulled on back as our markets went up. This is an inverse correlation to our stock market. So now you're seeing a bounce here. This could be a continuation higher in the yields, which will be bad for the stock market. We just have to wait and see. On the dollar started to break down. That's a good sign for earnings in general, but it's still very elevated for the year. So we'll just have to wait and see about this. Kind of looks like a little bit of a head and shoulders pattern, but you know, who knows where that one's going to go. All right, so that's basically going to do it. I do want to show you guys our call from last week was the XLE. As the XLE started to break down, you could see very clearly here that there was just no more buying to take place. And why is that? Because of what we showed you guys. On the, not daily, on the weekly chart, you have a very nice head and shoulders. You have a head up here, a shoulder, and a shoulder. All right, you can see where it can go. You can see where it can go, where it came from. And that is a double top on the year. And this is what we've been saying all along. There's a lot of overhead supply right here or people just taking their profits right here to go back on down. And that's exactly what we got on the XLE. Now, this week, I won't be doing any predictions for any stocks at all, because this week, what is going to matter the most is the Fed and the CPI. All right. I can't put any stocks possibly to buy when you have something like that on the horizon. So trade smart, trade safe, hit that thumbs up for the video, and I'll see you on the next one.